Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 23rd. Wow. Today is the day this week. Everything's being kind of really pushed into one day this week. So basically, this whole week's worth of economic data is going to be pushed into today. So today will be a little bit longer than normal. Tomorrow, the only thing we have is the weekly jobless claims has been pushed to Wednesday due to Christmas being on Thursday, since the markets will be closed Thursday and Friday. So tomorrow will be the last day. Of course, the market will be closing early on Wednesday as well. So this will be a short week. We'll start off with a big report here. We had the GDP for the third quarter. This is the final revision for the third quarter, and the previous reporting was at 3.9%, and the forecast was supposed to be at 4.4%, and exceeded all that. So third quarter blew everybody away at 5%. So great numbers out of the third quarter here. Second, we got the FHFA home prices index from October. So we had a 4.4% in September, year-over-year appreciation, and October actually went up a little bit to 4.5. So good numbers there. We liked obviously seeing that. Durable goods orders. So we had a 0.3 back in October, increase in durable goods orders, and it was supposed to rise up to 3.3 in November, and actually contracted to negative 0.7%. So huge miss there in terms of durable goods orders, which is also important data that we look at determining the economy and everything. We got the consumer sentiment out of the Michigan, University of Michigan's survey, and we had a 93.8. The forecast supposed to remain at 93.8, and it dipped slightly to 93.6. So people weren't feeling quite as rosy, but it's not far off the mark. So that say that people are in a bad mood or anything. Personal income for the month of November, we had 0.3% back in October. It was supposed to increase to 0.5, and it increased to 0.4. So good numbers there. Spending, of course, we got the holidays here. So we had a 0.3% back in October. It was supposed to increase to 0.5, and exceeded that. So people exceeded a lot more in their spending versus their income in the month of November rather. And then we got the core PCE. This is the stripping out the volatility of the energy and food prices out of the, and this is the Fed's favorite gauge actually for looking at inflation. So we had a 0.2 back in October, 0 supposed to be for November, and it came in at 0, primarily because obviously the drop in food prices. Now the year over year, if you look at this, it's actually at 1.4%, so far off the mark of 2%, what the Fed would like to see. So of course they're still watching this. They're concerned that potentially maybe there might be deflation on the horizon, so they are watching that very carefully, that we don't go the opposite direction, as Europe was kind of under that concern. And last but not least, we got the new home sales for the month of November. So we had 445,000 back in October. It was supposed to increase in November to 450, and it actually contracted to 438,000. So not a good number there. So kind of a mixed bag today, but overall, the big one today is the GDP. So that's taking the center stage today. So a lot of these other ones are going to be disregarded, and stock market is taking its cue from the GDP. The only stock market index that's not really taking its cue is, of course, the one that's full of technology, and that is NASDAQ. So the NASDAQ's down slightly today. And of course, the big rally in the Dow. So now it topped over 18,000 so far this morning. So we'll see if it keeps it that way, but chances are it probably will. But the nice little rally on the Dow today, getting back over 18,000. Bond market came in at expense of the bond market. We pulled back. We were down about 6 basis points from where we left off yesterday. So that's enough for a little bit of pricing, slight worse in pricing for interest rates today. So, but again, we got on the other hand, stock market's up, and of course this bond market's down, which results as slightly higher interest rates today. All right, folks. Hey, you guys have a wonderful day. Hope you guys enjoy your holiday season here, and we'll catch you guys tomorrow with a short one, as there's really not a whole lot going on other than again, the only data being reported tomorrow is the jobless claims. All right, have a wonderful day, and thanks so much for watching. We'll see you guys tomorrow. Bye.